We are still seeing earnings struggles across some of the non-tech segments. If tech isn't working, then the market is most likely going to go through a period of churn. And that was our outlook coming into second quarter. Is all the way back in really the early part of March, we started to see signs of a leadership shift emerging on the S&P. Tech reached a near-term peak in relative terms. I think that was precipitating the earnings season that we're going through now, which is tech companies face almost impossible expectations, and thus only a few are going to be able to beat and raise relative to expectations. So that creates a little bit of friction, that creates a little bit of disturbance for the market. It doesn't necessarily mean all bets are off and it's time for the equities to plummet, but it does mean that we might have a period of churn for the equity market as we determine where leadership likely lies going into the second half of the year.
Yeah, so where do you think that's going to come from then, if it's maybe not going to be tech, or maybe just not tech at double digits?
Yeah. It's very difficult to say yet, because what is generally happening is tech and communications together are still sectors that are leading overall growth trends. The rest of the index is starting to catch up. But you highlighted just this morning, we are seeing positive trends emerge in some other segments. Consumer segments are still pretty stable. Healthcare, when we get past the one-time charges affiliated with accounting changes, are also starting to show some pretty significant growth. For the first time in several quarters, we should see stabilization emerge for energy, which is yet to really report en masse, or at least some guidance that it should start to get a little bit better for energy. Financials didn't start off great with banks, but the bigger companies have yet to report in financials. So where are we going to go with financials? There are a lot of questions still, and I think that that is also part of the reason why the market has been a little bit dodgy so far in the second quarter. We don't know where leadership is likely to come from. The one big thing we know is that the market is likely to trade with that leadership as it emerges.
And so what's the next big thing you're looking for in terms of earnings here?
Yeah, I think the biggest thing you need to look for, of course, you want to watch the big cap tech stocks. There is still opportunity for some of these companies to hit it out of the park and surprise. NVIDIA is, of course, still the stock that everyone is watching most carefully. But beyond tech, I do think we want to watch the rest of the segments of the index. Healthcare is the sector that we're watching most closely. Healthcare has been an incredible earnings downtrend over the course of the last year. We've got big charges that are masking an overall improvement in healthcare segments. We're also watching the consumer space as well as industrials and financials. I think beyond sectors, the big theme of this earnings season has to be what happens with margins and how companies are contending with inflation, which is not decelerating as fast as anyone had hoped.
Yep.
Are they retaining pricing power? Are consumers or their ultimate end market, are we seeing some pushback there? Those will be really key questions so far this quarter. Now, one stat that I don't think anybody's paying attention to, so far this season, 76% of companies are beating net income forecast or net income margin forecasts. Yep. So we are seeing margins beat expectations. That's the highest pace of beat since the pandemic. That will need to continue to generate some degree of optimism in non-tech segments.